What's up everybody, Tom here with another video. In this video, we'll be covering the latest stock market news moving the markets right now. We'll also be taking a look at our technical analysis thoughts together on the S&P 500, NASDAQ, Tesla, Bitcoin, and gold right now. We've seen some very big moves in some of these pairs, and it's worth noting exactly what the psychology is behind these moves and also what's going to happen in the future based on our technical analysis readings. There's so much to cover, I'm sure you're going to enjoy it. Stay tuned. So we'll get started where we like to start, which is taking a look at the stock market and the broader market over the last 24 hours. Again, a mixed bag of results here. Some technology stocks such as Microsoft and Apple down, while some kind of less liked stocks such as ExxonMobil up a little bit. And this is just the standard that we've been seeing since the vaccine news. A full amount of rotation going in and out of stocks to try to figure out what's going to happen in the future. Let's take a look at the last 24 hours of trade in terms of what happened on the Dow, what happened on the S&P 500, and what happened on the NASDAQ from the trading sentiment throughout the day. We had some selling in the morning, followed by a little bit of recovery throughout the day, but more importantly, selling into the close. And we know that that's where the big Wall Street players usually are positioning. And if we continue to see kind of a flat market with selling into the close, that's going to show us that there should be more selling to come and that Wall Street's starting to dump its positions to us, the retail community or the retail herd. Overall, if we look at sector analysis, another day of energy buying and real estate and financials. They were kind of the strongest sectors and the sectors that have done the best over the last couple of weeks. We continue to see utilities struggle, and this just shows what I usually see in markets during normal times. Sectors come into phase, become really popular, become hot, and then rotate out. And that's what usually happens when we're not in a crisis period or a crisis year. Always pay attention to sector rotation, as some sectors will become hot, then they won't be hot for a while, they'll cool off, they'll consolidate, waiting for the next move, and all the traders and everyone else will go to the new sector. So it's really worthwhile checking out these charts over the longer term. So what did we see yesterday? Well, we saw Fed Jerome Powell, the printing press himself, signaling that he wants to continue emergency credit programs and they should be extended. No new news here. He said the same thing, as it's a long way to go for recovery. Again, nothing new. And we scroll through some of the other things that he said. He obviously said it was going to be a challenging time. They're going to use all of their tools. I think this thing always is the kind of information we look at. Use all of our tools to support the recovery for as long as it takes until the job is well and truly done. So really all that means is they're going to continue to keep all of the current things in. They're going to use whatever else they've got if necessary, and that they are going to stimulate the economies way further than even the recovery phase. Don't expect them to just pull it back. They didn't do it last time and they won't do it again. They won't just pull back on their current emergency credit lines to the market. Another story of note right now, Bitcoin. Of course, Ray Dalio, very prominent figure in the investment world, he's come out and he said he might be missing something about Bitcoin. He's challenged Twitter to change his mind on this. And this is after Bitcoin now has surged past even our take of around $17,000. So this has been a very big bullish move, but I think now we're starting to get into a period where we need to be very, very careful about what's next for Bitcoin. It's moving a little bit too fast, too quickly, and we know that when the big whales come in and start selling it down and getting rid of their positions, it's going to have a decent correction. So we'll be taking a look at that a little bit later on. So it'll be interesting to see if anyone can convince Ray Dalio that Bitcoin is great and it's definitely an investment. He's obviously a big fan of gold, and that's his argument down here. And we'll have to see how that story plays out. I just thought it was worth mentioning. It's always funny to see people discussing Bitcoin in such a way. So fear and greed index here, what have we got going on? Well, of course, we still have put call ratios kind of in the middle of an area. Now, this is updated 17th of November, and it looks like there's been some extra calls opened in the markets over the last couple of days. So it seems that the retail community may be getting a bit bullish on the markets, and that could be good for anyone that's looking for some kind of small corrective dip here. I don't think we're going into a crash mode, but I do think there could be a small correction here, which might allow some people to get in with a few % discount to what's going on right now. CBOE put call ratios from Monday are in, and we've got here a 1.51 reading on the SPX, which is lower than it's been recently. It usually was around 1.9 for the last couple of days of bullish momentum after the US election. And that's good news again if we believe in the counter theory that if put call ratios decline, then overall what that means is that we have got less retail herders believing that the market's going to sell off, and therefore it's more likely that Wall Street will push it in that direction. Speaking of some other things that are going on right now, let's take a look at this US dollar index. So here's the weekly, and we've talked about how important this 92 support line is for the US dollar. But let's go into the daily and just take a look at the price action here. Another day of selling here on the US dollar, and we got some declines there followed by a little bit of an uptick. Always be looking at this 92 line, well worth having on your charts if you don't already have it there, as it's going to give us a good indication of the next couple of weeks, if not months, of sentiment if we are able to close below this line and then of course close it significantly. Continues to see sell-offs. The 20 moving average here on the 4 hour is probably the one to note. We got a pick back to that and a sell-off. If it comes back, will it sell off again? That will create a 1 and a 2. And then, of course, if it comes back again, the third time, well, you know what I think about that. 3 times the charm in terms of moving averages. You're starting to get a very good idea of a reoccurring event. So US dollar, really not too interesting at this present time, but a pullback maybe to this 92.50. Previous supports may act as some resistance. We might see a 20 exponential there. So scalpers and day traders may see opportunity to the short side if we get to that point over the next 24 hours. Volatility index, fear index in the market. Well, fear is certainly coming out of the market since we heard about the vaccine news. We're now sitting at a 22.7 reading, but we are still not under 20. Not much more to note here. We've mentioned how under 20 is normal market, over 20, anything can happen. And that continues to be the story at this present time. Before we look at Bitcoin, Tesla, and the stock market indices, let's have a quick look at gold here. Gold maintaining this 1880 level. It should really be finding further strength here considering US dollar is declining. So this is showing that people are still dumping gold into the market. The sellers are still pretty big and prevalent. We would like to see a close above 1900 still, and what that will do is that will really get us through every one of these important 4 hour moving averages, and all of those become dynamic support then. So that means the 200 simple moving average, the green line, the 50 exponential, and the 20 exponential being the red line, they will all act as dynamic support. We'll be getting through a 1900 zone, and at that point I would expect bulls to get firm control. It's still at the critical point between the bulls and the bears right now, and where previous resistance is just holding the market up, and hopefully it can continue to do so if you're a gold bull, which I know a lot of you out there are. Let's take a look at Bitcoin now. So Bitcoin, we originally expected when it broke through this point that it would go around this distance. And this distance here was going to be our ascending triangles expectation. Now that took us into around a 17,000 reading. Typical of Bitcoin and Bitcoin traders, they've completely bashed that and smashed it through. So what kind of characteristics do we want to be looking for now in Bitcoin? Well, I think it's very difficult to start buying it here. We had an excellent reload zone right here at this previous resistance becoming support zone. But we've also talked about this a few times, being the 50 exponential moving average has been a pretty interesting reload area on the 4 hour chart. Now, if the market pulls back, that's going to be pretty significant considering how far it is away. So what do we know about Bitcoin and the psychology of the retail trader? It likes to stop at round numbers. We didn't quite reach 18,000. We'll probably try to go up there throughout today, possibly get just under 18,000, and then start to see some selling pressure. And I wouldn't be surprised at all to see a significant sell-off back into a 50 exponential moving average, and then potentially the bulls to remain and get back in control. If we put this to a weekly, let's just put it in perspective of how this bullish move is and how aggressive this bullish move is. Notice during the aggression of Bitcoin over time, it continued to pull back to the 20 exponential moving average over its really bullish movement. Then it went hyperactive, full euphoric, and had the blow off, which caused, of course, the further selling pressure. Now, this was just an insane time for Bitcoin, and I don't think we're necessarily going back to that kind of zone or level. But let's just say here that we go towards 20,000. Just before 20,000, do we expect selling pressure? We certainly would. And it's worthwhile just having all of these levels on your charts and thinking every 1,000 and every 500 points on Bitcoin is going to be incredibly significant. And if you're in profit, maybe you could always think about also scaling out of a position and then looking for a reload. We most likely will see a blow off at some point in Bitcoin. It's the nature of the commodity or nature of the instrument, and it could blow off as much as 20%. I certainly think that's very, very possible here. Let's take a look at Tesla. Tesla, big news, S&P 500 inclusion. As is normal with Wall Street, it opens right on the 462 level and then of course sells off straight away. This is the resistance zone for Tesla, and it continues to be the most important area for the bull's case. If we get through this area, what happens? We trigger into this 500 plus market very, very quickly, I'd say, and possibly even new all-time highs. That's how important this 462 is, worthwhile having on your charts. So yesterday we got down to about a 440 kind of reading here. And that's interesting because 440 has also been a decent little zone. If we look at 440 on the chart, previous resistances acting as support, there probably will be some buying pressure here for Tesla around this price. I think post-market was about 438.94. So should be some buying pressure as long as the market sentiment holds up. And we may see another test of the 462, and then of course if it gets through, great news for the bulls, and if it fails to do so and comes back down, well, we'll be talking about that in future videos. That will be very, very important. Let's now talk about the indices around the world. We'll start with the Russell 2000 here. So Russell 2000 has been the standout in terms of movements, and this actually has surprised me to a degree, but the price action has been incredibly aggressive here on the Russell 2000. Now I've got it on a weekly. And the reason I've got it on a weekly is all of the moving averages held last time. The 50 and the 20 kind of sliding with each other, really touching each other, and the price action came down and this level was supported. Then the 20 was supported again. So we're starting to get a bit of an idea that if the Russell does come down and it hits a 20 exponential moving average, it would make a lot of sense for that area to also be a key area for us to be looking at reloading if we were interested in this particular pair. Now, Russell 2000 also has hit all-time highs. Let's go to a monthly just to show how significant this rebound was. Under 1,000 to 1,800. Massive move here in terms of the Russell 2000. These are, remember, the smaller cap companies in the indices in America. So it's either the Fed money's getting there or people are going crazy right now on us. So I've taken a look at the smaller time frames on the Russell, and there's no real clear moving averages or anything rhyme or reason in terms of things that's pulling back to during this bullish aggressive phase. So I just probably caution people that we've just hit an 1800, we've hit an all-time high on the Russell 2000, and I think that it's at that point now where we should be seeing some small sell-off pressure. If we break through to new highs, well, that could trigger all the way to a 2000 reading. Yes, I'm that serious. It could be that big a move for the Russell. But at this stage, I think that we should see some selling pressure potentially come back into the Russell, but the price action is just trending up. And all we're really saying is that at some point we will get that 20 moving average. And I would say that it's going to start coming possibly over the next couple of weeks, especially without stimulus from Congress. A very important point. If we're taking a look at the US 30 or of course the Dow Jones, in this case, I just had this RSI indicator up and I just wanted to quickly circle some of these key points in time that have been RSI overbought readings. Now, I don't usually use RSI or these indicators that much on the channel. And the reason why I don't do it is because yes, sometimes they are correct, but often there is quite a large move after the RSI reading is overbought. Similar to Bitcoin right now, you put RSI on that, it looks crazy, but that's what can happen. That when they're euphoric, they continue to move on. So the RSI is getting right up there in sell territory, and we have of course reached that psychological number of around the 30,000. We're about 200 points now underneath that area. So I'm not going to go too much more into the Dow right now, but it's a very interesting psychological level. And if this is failing to continue to break through it and we see more tests of this resistance, it's more likely we will see a very decent pullback, at least back to the 29,000 again after, of course, the failure busts do occur. US 100, the story of a different market indice right now. It's definitely the weaker one. If we go through the same thing as yesterday, the 200 simple moving average should be buying pressure. We're about to reach that. Do we see buying pressure again? Definitely a significant kind of moving average that's been hit here on the 1 hour chart. But again, really, this is all about starting to tip over. This is starting to look like it's kind of moving on down. And that's just because it's losing momentum, and clearly money is coming out of this index right now. And I don't think it's necessarily fairly justified. It's going to take longer than people think to get this vaccine out there. But again, that's what's happening on the US 100. And we'll go further into technical breakdowns on this after we see another day of trade. I think we need to see a little bit more here from the NASDAQ overall. Let's now talk about the S&P 500, and let's talk about the big moves that we've seen on that. So in futures trading, we've got as high as the 3667. That is the SPX. This is the real market here. That is the SPX R2 level for the monthly pivots. We've talked about how monthly pivots have been often respected around that price, and that these are incredibly important zones. We also know that when the monthly R2 is reached, it's very rare for the market to continue to the monthly R3 during that month. Monthly R3s are not often touched. They were touched over here, but before that point, they're not often actually breached. Even during this recovery phase, because the pivots were so far out, we did not see that many R3s getting breached. And even when they breached, they barely did. Look at this, hit the R3, and then of course opened the next month and moved towards the R1 and sold off. So that was an extended market there. Beforehand, if we go through all of the movements over time, again, R2s, even when they're compressed, very difficult for the market to get too far through them. So we do need to pay attention to this. And right now it looks like the S&P 500 is just kind of having a break at the resistance. This is the real market. So this 3625 zone has not really been broken and closed above yet. We're still far away from the 20 moving average. We still could see a pullback to this 3550. Previous resistance would act as support, and a 20 moving average on the 4 hour. I think that's a fairly significant level, and it'll be worthwhile for day traders to have a look at this zone if they were looking at potentially opportunities during that day. 20 moving average on the real market, previous resistance, all there, and of course the trend is still up. So for now, the trend is continuously up here for the S&P 500. But if we get through these previous support lines, I think that would be pretty much signaling a little double top for now, and we continue to see some decline after this initial big move from the US election. So look at this level as well on your charts. And of course, if that 20 doesn't hold, it'll probably come down to this area. It'll test this 3520. And if we see it close below there, I would say that triggers further shorting pressure, at least into something like a 3400 zone. So there could be some big selling coming in through here if we are unable to hold this 20 exponential, previous resistance high, or make a new high over the next couple of days. All these levels will be worthwhile definitely having on your charts. So if you've enjoyed this video, please remember to, of course, hit the subscribe button and the alert button. And of course, give us a big thumbs up if you like supporting the channel and you think it's good content that's worthwhile for you and many others out there. We'll see you in another daily update video tomorrow. Good luck. And of course, as always, make as much money as humanly possible. Bye for now, guys. See ya.